So next up is income producing assets, and I'm going to jump straight into the whiteboard for this one. So I'm going to quickly run through three income producing assets, probably the three you're most familiar with. Of course, there are loads more, but I'm just going to focus on these three now and try and get through this fairly quickly. So number one, dividend stocks, right? So by purchasing dividend stocks, then you would receive a dividend yield. So you would divide the annual dividend by the existing stock price, and then that would give you your dividend yield. So in general, around 2 to 3% is classed as good, and then anything over 3%, so say 4% and upwards, is classed as a fairly high yield, right? So once you've done this, then you'd probably look at the dividend payout ratio, which is the percentage of earnings that the business pays out as dividends, right? So in general, the higher this is, the less safe the dividend is, okay? Now, if we were to look at, say, a high dividend stock, like, British American Tobacco, they have an annual dividend yield at around 6%. So, as you can see, you can receive income from dividend stocks. So they are an income producing asset. However, this all comes down to the two main and most important things, as usual: risk appetite and also time horizon. Okay. And also we want to be looking at, what's our return on our invested capital, which is our ROIC. So, our return on our invested capital is going to be a very key metric to look at when we look at any asset class, okay? Especially income producing assets. Now, moving over to rental property, right? Another very desirable asset class and desirable asset that produces income that many investors look at. So, there are many different ways to leverage your capital to increase your ROIC, so return on invested capital, when it comes to property, because there are so many different strategies, okay? And look, some are riskier than others. But look, this is another way where you can own an income producing asset just by buying, holding property and collecting that rental yield. Now, of course, the numbers do need to stack to make this worthwhile, right? There are many moving parts to make sure a deal is actually a deal. But in general, in the UK, estate agents would say, 6% is, a great yield on an investment property, right? I beg to differ. I disagree. There are ways that you can get infinite ROI when it comes to buying property, which, I've personally done many times, and I still hold the assets now. So, that's dividend stocks and rental property. Okay. And again, you can approach these in many different ways. So number three is staking crypto. So, by staking cryptocurrency, you can basically earn rewards, right? Now, there are risks associated with this, just like there are with other assets as well. And again, there are a lot of moving parts, right? So, you also do need to take into account, do you want to chase these staking rewards and then the asset itself loses value? Okay, so you do have to weigh up the risk reward, because look, you can't time markets, right? Markets can be hard to navigate, but look, the market will always end up dictating the value. Okay, so if you don't know your personal risk appetite or time horizon, the market will tell you where you are at with both. Okay. Now, look, it is essential that you do your due diligence before investing in anything, more so cryptocurrency, because there is only so much due diligence that you can do. Now, look, there's some great income producing assets available to us right now, but a lot of investors miss them and miss opportunity because they're looking for the next moonshot where they feel they can get loads of gains from, right? So we need to have a framework and a game plan and stick to it, right? All emotions off the table, execute the game plan, don't compromise unless you have to adapt, because anything can happen in the market. So make sure you're ready.